Yeah, thank you for having me.
All right, so we're talking DocuSign, the report after the close. It seems like, Andy, every quarter we talk about this stock, it's one of those names that, it seems like it makes everything easier. The total addressable market's huge. The stock hasn't really participated in this rebound that we're seeing across tech this year. Do you guys have data that backs up this move?
Yeah, the company actually put out data themselves last quarter. The stock moved down 14% after their leadership really said that demand was deteriorating. They put up good numbers for the prior quarter, but their outlook was pretty weak. And right now we see a continuation of that. When we look at purchase intent mentions for DocuSign, in other words, people talking about creating a new account, starting a new document process with the company, we see those deteriorating at an accelerating pace. We think it's going to be very difficult for the company to have an optimistic outlook into the future. They're probably going to have to lean on some, buzzwords around AI and things like that to try to get investors excited about their future, because I think right now they've got a pretty cloudy outlook, and a lot of it has to do with the deterioration in the housing market, not in home prices, but in transactions, and in refinancing transactions have pretty much gone away as interest rates have gone up. People aren't moving as much or buying homes, so there's just a lot less activity that needs signatures, and that's where DocuSign really shines. And so I think there's good reason to think that we could see a repeat of last quarter. The stock has almost regained or has regained all of that loss that it had last quarter after its earnings call. I think this is a pretty good setup for a bearish trade going into earnings tonight.
Hey, Andy, Nate here. When I look at your chart there of the positive mentions and negative mentions, on the long-term chart, it looks like you have a positive correlation with the positive mentions and negative mentions, meaning they kind of track together. And then it looks like towards the end of that chart, around early March, the negative mentions are going up, and at the same time, the positive mentions are going down. I understand the housing market situation, but I'm wondering, does this have to do with the regional banks, or is there something else going on there that would contribute to that kind of reaction?
Yeah, what we find with this, and you're right, it's a good eye there, is consumer happiness levels around DocuSign's products have also declined. The ratio between those who are happy and those who are unhappy, the unhappy starting to win a little more. You can see it at the end of that chart, and that's certainly not good for a company that relies on subscription revenue. It's generally an indication that we're going to possibly see a considerable amount of churn. I think there's a lot of people and a lot of companies that signed up for DocuSign accounts during the pandemic that they simply really don't need anymore, or they don't need the level of package that they needed when everybody was working remotely. And the other side of this, I also think, as that consumer happiness deteriorates, it means that there is more room for competitors to move in. And I think competition in this space is heating up in a really big way. Microsoft has, Adobe has similar products that can get the job done really kind of within people's normal workflows. You don't necessarily need a DocuSign account to get e-signatures done. And so again, I think, this company's business is a good one. I think the product is very good, but it's just kind of feels a little outdated. It feels a little unnecessary in modern workflows. And I think that the company's going to have to come out and try to put on their artificial intelligence cheerleading outfits to try to get something positive going for Wall Street.
Yeah, and Andy, when I look at this, they've got really good gross margins, over 80%, yep. Operating margins topping 20%. We're seeing that total addressable market kind of expand. To kind of expand on what you were saying, is this just basically due to that a lot of economic activity that deals with this, whether it's lawyers, whether it's property, that is going to be the key for this company moving forward, that they need to see the economy start to get healthy instead of deteriorate, and that will be the boon for this type of company? Because maybe a smaller company might not use Adobe or Microsoft, but they'll use DocuSign. I've used it a few times myself. It's a great product, but to that point, is it economic activity that's a driver for this type of stock?
Absolutely. I think that, part of it's just, momentum of interest rates. I think that the longer interest rates stay the same or even come down, the more people get used to it, the more transactions will reinvigorate. So I think that's a huge part of what has to happen for DocuSign. I think the other risk for us, if we're going to be bearish going into this earnings call, is I think that there's probably room for the company to get rid of some staff and to increase, that operating overall margin, which Wall Street could like. So I think, kind of the two risks on this are, they've already indicated they're going to get into AI, and that's a buzzword, so that could help the company. And then, if they really focus on margins through headcount reduction, I think that's the other side. But in terms of consumer demand, consumer happiness, things are not going DocuSign's way right now.
And you mentioned you're a little bit bearish as far as your data goes. What's the earnings score going into this one?
Yeah, we're at a -39, which is fairly bearish, and I think worthy of a trade.
Yeah, definitely. They give cautious guidance all the time. They just changed their CEO also, so we'll have to wait and see on that. But great data as always, Andy. Appreciate it.
Thank you. Have a good one.
All right. That's Andy Swan, co-founder of LikeFolio, breaking down the data for us here on DocuSign. Nathan, now I want to get your take here on this company. It just seems like easy, like this company should do really well. They've got high margins, but if the economic slowdown continues, that might cause some problems. Option market's pricing in about nearly an $8 move either way in the stock. How do you want to look at this from an example trade?
Sure. Yeah, and you're right. I mean, I think the total